The recording has started. I would like you to mute yourself and only raise your hands to ask questions. I also want to tell you that this class is not going to be long, right? So we are starting quite late, so I don't want to take your time too much. So I'm going to start sharing my screen. Can you all see my screen? Okay, thank you. All right, so I'm going to make Wanda the host. All right, so Wanda is now the host. Then I'm going to turn off my video. Okay, I expect that you can still hear me. Some of you are still not muted. Wanda, can you mute Olamide Elushakin? Just mute everyone. Make sure the settings is set to everybody coming in is muted. Okay, so let's go on. Today we'll be looking at the laws and institutions that regulate the practice of banking in Nigeria. Now, as we continue, I would like you to ask your questions through the chat or raise your hands and you'll be unmuted to ask your questions. So today we are looking at a part 2, our second class. And remember that after this class, you'll be required to do a presentation on Thursday. Now, I will announce the changes as I communicated with Clinton some time ago, which is that your classes, the way it was it was scheduled before, you were required to present only on Thursdays. But the problem with that kind of arrangement is that you will not be able to use the amount of time that is required. We have only 6 weeks to go, and we have 12 topics to treat. So that means that if we continue with the way we already scheduled your timetable, it will be difficult to cover up. That is why we have decided that there will be 2 presentations in a week. That is to say, the group that is supposed to present next week Thursday, not this Thursday, next week Thursday, will be presenting on Monday. Let me say that again. The group that is supposed to be presenting next week Thursday will be presenting on Monday. Now, this Thursday, the group that is supposed to present this Thursday is going to present. However, after the presentation for this Thursday, which is in 4 days' time, the group that is supposed to present next week Thursday will present on Monday. That means that after your class on Thursday, probably on Friday morning, I'm going to do another presentation. That presentation will be short, but I'll just be introducing each topic so that you know how my mind works and you know how you are supposed to prepare for your presentation. So that said, I will continue with today's class, and I hope that before 9 o'clock we should finish. That is 15 minutes max. So when we talk about the laws and institutions that regulate the operation of banks and financial institutions in Nigeria, what comes to your mind? What is supposed to come to your mind are the various institutions, the various laws that a person who wants to operate in the banking sector must be aware of before he begins banking business in this country called Nigeria. By the time we finish, you are going to realize that the problem with Nigerian banking, if there is any, will not be that there are not enough laws or that there are not enough institutions or that there is no working framework that regulates banking. in the country, but rather that the fault of banking in the country would have to be systemic. That is to say, it is not the fault of the laws, it is not the fault of the institution set up, but the fault of the human resource manning these institutions. Okay, so let's go forward. What is the primary history of banking legislations in Nigeria? Now, you must have remembered from our last class and the presentations that followed that there were no banking regulations or laws in Nigeria up till 1952. The Banking Ordinance of Nigeria of 1952 was the first legislation that regulated banking business in Nigeria. And as you will well recall, it was created as a result of a, a commission that was set, right? There was a commission that was set to look into the problem of banking and the fact that many banks were crashing in the country. This commission presented this report, and it was the report that gave rise to the first banking ordinance of 1952. Now, this banking ordinance remained in force and regulated banking business in Nigeria until the Treasury Bill Ordinance of 1959. Now, if you go to page 7 of Igwe Ike's book, last time I reminded you of the book is really good for learning what is the accurate history of banking in Nigeria. But of course, histories are not important in law, but I just think that we should know about them because where would we be without history, right? So, if you read page 7 of Igwe Ike's book, you are going to find that Igwe Ike lays out a step-by-step approach of how banking regulations and legislations were created in the country. And it is from his book that many of what you are looking at now came from. Now, the Banking Treasury Bill Ordinance of 1959 was followed by the Banking Amendment Act of 1962, after which came the Bank Companies Decree number 51 of 1968, which were codified into the Banking Decree number 1 of 1969. Now, if you already have done your Lego method, you will realize that when a bill is codified, that means it is gathered in different places and put in one single document. That is what a code is, a legal code. Now, you may ask yourself, why was the word ordinance used for the banking legislation of 1952? But you realize that that time Nigeria was still a protectorate, a colony of the crown of Great Britain. We were still under colonial rule. And what the king or the queen normally would issue would be an ordinance. It is only after a democratic rule that we will have an act or a decree. And that explains the fact that there is the Nigerian Enterprises Promotions Decree of 1972, which was repealed in 89. And that is the complete host of banking regulations which had far-reaching effects on the banking sector. Now, there is something important about this Nigerian Enterprises Promotion Decree of 1972. One of the problems is that it increased the stake of government in banks, practically nationalizing many of the foreign banks that were in operation in the country. And as you realize, whatever government enters inside begins to fail. And that meant that banking business in Nigeria became very problematic. Many of the banks were dying, many of the banks were falling off. And there were no much progress being made until a particular reform reduced all stakes in government in banks to 10%. You may remember that reform from our presentation last week as the Solido reforms of 2004. So if you read Igwe K's books, pages 6, 7, and 8, And if you read Dr. Rifomo's material, you'll be able to see a short explanation of the history of banking in Nigeria right before uh, the establishment of the major legislations that regulate bank in Nigeria. Now, I don't know if you are still seeing my screen. Please, if you are seeing my screen, can you confirm what exactly you are looking at now? Through a chat, of course. So just send me a chat. Tell me exactly what you're looking at now, if you can still see my screen. Somebody? Okay, I can see a chat. History of banking. Yeah, thank you very much. Right up to 1952. All right, thank you. So, um, these banking legislations were scattered in different documents. You know, prior to 52, if you wanted to register a bank in Nigeria, all you have to register a company from in CAC, just like every person can do, right? You register a company, you apply to add the word bank to it. Once you do that, you are qualified to do banking business in the country. However, that is no longer the case, as you may well know. You cannot now just open a business, call it a bank, and start collecting people's money and doing deposits and all that. No, you can't do that now. In order to do banking business, you must have to fulfill some conditions. One of the most notable that scares the average person away is that you must have a capital base of 25 billion with the central bank. All right, so let's move on. Applicable laws today. There are two major laws that regulate banking in Nigeria today. One of them is the CBN Act, and the second is the BOFIA, Banks and Other Financial Institutions Act. You may have realized that prior to this slide, I called it a decree. You can see, okay, did I call it a decree or no? Yes, all these were later codified into the banking decree, but this is not the BOFIA. You are going to see that in Igwe case book, it is referred to as BOFID instead of BOFIA. And you realize the reason why it is called BOFIA and in Igwe case book is referred to as BOFID is because at the time Nigeria was under a military rule. It was the BOFID or the BOFIA as we have it now was actually a decree of a military government. So when a military government makes laws, it is known as a decree. Now, when we transmute to a civil era, it will be unconscionable to still refer to such laws as decrees because clearly we are not under military rule anymore. So it is now referred to as the Banks and Other Financial Institutions Act, BOFIA. Your parents may remember it as BOFID. Moving on, you must realize that these are the two main laws that regulate banking business in the country. The two main laws. What are the salient features of the Central Bank of Nigeria Act? The first salient feature is that it affirmed the existence of a Central Bank of Nigeria. Now you say, why is it not creating the Central Bank of Nigeria? It's not creating it because the Central Bank of Nigeria was already in existence prior to the BOFID. So what it has to do in that respect, since it does not want to abrogate the institution, is to affirm its existence. The Central Bank of Nigerian Act also places the overall control and administration of the monetary and banking policies of the federal government on the central bank. So what this law majorly does is that it created responsibilities for what the central bank should do. It galvanized banking functions, and placed a lot of the responsibilities on the Central Bank of Nigeria. Now, you are going to see in the act that his major his major mandate was majorly upon the central bank. So his section 2, for example, in establishing this, in iterating the purpose of establishing the central bank, pointed out that it has the responsibility for controlling and administering all the monetary and banking policies of the federal government. So if you read all of this together, you are going to realize that first, it creates responsibilities for the central bank. It puts up what the central bank is supposed to do and achieve. Also, it talks about the profit-making purpose of the central bank and its establishment as a public service. Okay. Now, you also would realize that due to the fact that the central bank was created by the act, it is a legal person. So by the time you do corporate law, you realize that to become a legal person, there are different there are different ways you can become a legal person in Nigeria. You can become a legal person by incorporation, by operation of law. That is when a statute creates a particular institution. For example, the CBN Act by creating the Central Bank of Nigeria. So you can sue the Central Bank of Nigeria as a legal person because it is created by statute. All right, moving on. The BOFIA. The BOFIA is the second act that regulates banking business in Nigeria. It makes provisions for the entry, regulation, and exit of persons or corporations in relation to banking business. Well, I'll just point out that Ojo Elizabeth Oroluwa has been giving us a tour of her house, and that's nice. That's nice. I can see a tour of your house. Can you stop touring your house? Thank you. Just switch off your video. So the BOFIA also empowers the central bank to carry out routine, periodic, as well as special supervision and examination of the banks and their records. So somebody will say, does these two acts just make provisions for what the central bank can do? Yeah and no. All right. Yes, in the sense that there is no way you can provide for banking business in Nigeria without heaping more and more responsibilities on the central bank. And no, in the sense that this act does not just provide for the central bank, it also provides for what other banks can do, how you can become a bank. It talks about the fact that you can only become a bank after being licensed by the central bank. So I would like you all to download the CBN Act, also download the BOFIA, because as much as we continue, you are going to find these two acts very, very important to you. They are all available on Google and you can have it. The BOFIA has been amended severally, so you should take note of the amendments. So yeah, moving on. What are the regulatory authorities for banking business in Nigeria? There is the Central Bank of Nigeria, CBN. There is the Nigerian Deposit Insurance Corporation. There is the Securities and Exchange Commission. Of course, the Ministry of Finance and the Federal Mortgage Bank of Nigeria. I want to add one more, and that is I'm adding this and I'm being careful. Is not is not in your book, right? But I'm adding it because is salient. You should know about it. The AMCON, Asset Management Corporation of Nigeria. This AMCON has become a very important aspect of Nigerian business, especially since the Sanusi reforms, right? Sanusi reforms of the banking sector has led to the AMCON being a very, very important aspect of the Nigerian banking sector. And we're going to see what the AMCON does as we continue. So let's look at all of these regulatory authorities, and that is where we end our class. Now, Central Bank of Nigeria. We've started talking about it before, but let's continue. What is the central bank? What does the central bank do? The central bank serves as the principal regulator and supervisor in the money market. Everything that has to do with money in Nigeria, the activities of finance companies, specialized and development finance institutions. The CBN is like an end all and be all. Everything that has to do with banking business in Nigeria, the CBN takes care of it. It also issues and distributes currency. Now, legal tender and currency is largely the same thing. But did you know that any bank is required to produce its own legal tender? In those days, legal tenders were not produced by companies or countries. They were produced by banks. So each bank has its own legal tender. It is only as society developed and as government began to centralize the regulation of banking business that banks, right, began to reduce their functions of printing money and left it to central banks to issue. So in Nigeria, the organization that prints money is the Central Bank of Nigeria. Okay, so even prior to the 1952 ordinance, many banks had the right to print their own legal tender, but they did not, because of course, printing legal tenders is costly. And if it's not a legal tender that is in use all over the country, it can become useless. And sometimes, in after the war, right, Nigeria changed its currency from the naira to the pound. And that was also something that affected Biafrans a lot, in the sense that when the Biafrans were going to war, before the war, many of them would pull out their money from the banks, right, and hide it. But then, when Nigeria changed that currency from pound to naira, that means all the pounds that were being hidden by Biafrans, all the pounds that they had that they could use for business became useless. Okay. Another thing that the central bank did for Nigeria during the war was that uh, the central bank made like a regulation that no matter how much a Biafran had in his bank account, the only amount he could be able to withdraw would be 20 pounds. So even if you had 3 million as a Biafran, or you were very, very rich and you had, like Ojuku's dad, right? You had money in different banks. The only thing that the bank can issue you back was 20 pounds. And that practically crippled the economy of the Biafran area, the Igbos and the South people that were Biafra of those days. So, but over the years, the region has been able to bounce back and develop, notwithstanding that particular problem. So I'm just saying this to have you understand that the central bank determines how currency is issued. The central bank decides what is a banking policy. The central bank is going to decide, for example, how much each person can get after this, the powers of the central bank over the money of a nation, especially in the Nigerian sector or in the Nigerian system. The power of the central bank to decide what anybody gets and the way your money will be secured in banks is very, 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 very wide. So the central bank also manages Nigeria's external reserves. That is, whether we have crude oil reserves, all these other reserves, the central bank manages all of that. The central bank is the banker for the government. Now, you may realize that I did not say bank, right? I say banker. Very soon, we are going to define who is a banker, who is a customer, what does bank mean? So you understand it fully. But I can give you a snippet, which means a banker for the government is the person that acts as government's bank. So if your father works for the federal government, he receives his salary from the Central Bank of Nigeria. The Central Bank of Nigeria is the government's bank. The government does not bank with Access or UBA or whatever bank. The government banks with the central bank. That's why salaries come from the central bank direct. And I should add that the central bank is the banker of bankers. So that means every bank has a banker. So GTB has assets in the central bank. So when we talk about the 25 billion capital fund, it has to be with the central bank. Also, the central bank is responsible for promoting a sound financial structure in the country. Whether Nigerian finances go up and down depends primarily on how the central bank handles that particular affair. Okay, moving on. What of the NDIC? The NDIC complements the CBN in regulating deposit insurance. The NDIC is required to obtain information, okay, and it insures banks. The NDIC is the insurer of banks. Somebody asked a question last week, which is, what will happen if, for example, the NDIC says we insure everybody's deposit up to 500,000? What would happen to money that is above 500,000 naira? Somebody asked that question last week, and I wasn't able to answer that. I said I am not very informed on that, but I have gotten the information now. And I can tell you that if an insurer decides that, or your insurance policy with a particular insurer decides that your insurance limit, insurable limit is so and so amount of money, that amount of money is the only amount that can be paid you in case of an accident. So let's take, for example, if you insured your car for, let's say, an insurable limit of 1 million naira, and you pay your premium regularly. Premium is the amount of money you pay when you insure something. So an insurance happens this way, that somebody sees a particular product, right, and wants to insure it against fire. Let's say my textbook. I go to an insurance company and say, I want to insure this against fire. How much is the book? 5,000 naira. How many years insurance do I want to have? The nature of the insurance can be that if this book catches fire, the insurance company will buy me a new book, or the insurance company will give me 1,000 naira, or the insurance company will take me to a place to buy a book, purchase the book, and give me. So if I'm paying that premium, let's say every month I'll pay 100 naira. Every month I'll pay 100 naira. For that 5 years, if nothing happens, the insurance lapses. However, if, for example, at any time before that 5 years, something were to happen to my book, let's say my book were to catch fire, the insurance company will do the thing that we have agreed that they should do for me. So you see, musicians insure their voices, people insure their cars and valuables and all that. However, if you insure your life or your bank or your money or your building or your car to a particular amount of money and say, okay, insurance company, what I want you to do is to pay me 2 million naira on my car. Your car is worth 5 million, but you want to do the insurance package of 2 million. That is the insurance limit. So if you go and bash the car and it's totally bashed, as in the car is meaningless, it has to be changed. The insurance company can only give you 2 million naira because that is the extent of your insurance. Bringing it to the function of the NDIC and the banks. The NDIC requires that every person's deposit is insured up to 500,000. So if you have more than 500,000 in a bank that goes into liquidation, you will not get any kobo above the 500,000 naira limit. So you can only get anything below 500,000 or anything up to 500,000. So there are other functions of NDIC in the Igwe case textbook online and in the material as supplied by Professor Rifo. And what you have to note is that the NDIC gives financial assistance to failing insured institutions. Also, the NDIC has a way of taking over a failing financial institution and selling it to a financial institution that is still liquid. For example, when Diamond Bank was failing, it didn't just allow it to wind up. It took over the assets, bought the debts of the Diamond Bank, and sold it, right? Sold it to Access Bank. That is why all of you that have Access Bank accounts, sorry, Diamond Bank accounts, it just moved into Access and your deposits were all secure. That process is not the process of liquidation. It's not the process of winding up a company. That process is just a takeover. One company takes over a failing company, assumes its risks, liabilities, and assets, and continues its operation. So that's what Access has done. Okay, so the NDIC is an agency of government, right, that maintains that kind of balance between failing institutions and institutions that want to take them over. And in thus, in that manner, the NDIC maintains the belief, the trust of individuals in the banking sector. Moving on, the SEC, formerly called the Capital Issues Commission. You learn a lot about the SEC, especially in the law school. The SEC is the apex regulatory organization for the Nigerian capital market. So what is the Nigerian capital market? Nigerian capital market is the Nigerian money market, the market where bonds, debentures, shares, stocks, sukuk, all these things are sold. The money market, the capital market is regulated by the SEC. So whenever you hear of stock exchanges, all these security exchanges, the SEC takes care of them. So the SEC protects the public, the investing public. So not the ordinary public. Okay, if you are just the consuming public, the SEC does nothing for you. But if you are the investing public, the public that buys stocks, the public that invests in shares, the public that takes debentures, um, purchases securities and all that. The SEC is an organization that lays down the rules and regulation for each player in the industry. Okay? It determines the prices and the time company securities are to be sold, the volume of the sales, and registers all security dealers to ensure professionalism. So instead of having people just come out and set up their own small stock exchanges, the SEC of Nigeria takes charge, right, to regulate every form of sales in the all IPOs, that's it, public offerings. You know, when a company announces its shares to the public, it must do that with permission from the SEC. All right. So the law that regulates the SEC is the Securities and Exchange Act. There's an act to that effect. We didn't state it as part of the laws that regulate banking business in Nigeria because it really does not regulate banking business in Nigeria. It majorly regulates commercial activities in the capital market, and not every bank is listed in the stock exchange. All right, okay, but many banks are, but not everyone is. So the Federal Ministry of Finance, which is the organ of government that caters to the federal government's involvement in the financial system. If the federal government were to involve itself in the banks, in the making of policies, in deciding what happens to monetary functions, it is the Federal Ministry of Finance that it works through. So the Federal Minister of Finance advises the federal government on the fiscal operations that can influence monetary policy. It tells the government this is how you invest your money, this is the best place to do this. And it's also the Federal Minister of Finance that liaises with the CBN to issue orders like the ban on cryptocurrency. So you can see the third arm here is to cooperate with the central bank on monetary matters. So if, for example, the Federal Minister of Finance feels like it can no longer regulate the functions of an industry that's also like dealing in money, it can work with the CBN to ban the operation of that. So the Federal Minister of Finance is more like the hand of government in the financial system. So they take charge of policies, they help to create things that will function as banking regulations. The federal ministries advise the government, is the government's advisor is also an organ of government. So that is the function of the Federal Ministry of Finance. Now, there is the Federal Mortgage Bank of Nigeria, which is the apex mortgage financial institution in Nigeria. Okay, so I'll quickly introduce what mortgage means. You may think of mortgage as somebody just buying a house and paying for it little by little, which is definitely what it is, right? But mortgage goes beyond that. Mortgage can happen that if I want to buy a house, I don't have enough money, like I don't have the 30 million to buy a house now, but I have a salary of 100,000. I can go to a bank that will purchase the land, right? Keep the documents with them, and be deducting like 20K from my account for the next 30 years that I'll be in the public sector. Now, in Nigeria, you may not have mortgage institutions give you that amount of time to pay back a loan. But in established economies like the US and the UK, you see loans that run up to 30 years or 40 years, right? So a house is 3 million, you pay like £1,000 a year. So you over 30 or 40, pay like £1,000 a month over a period of 30 years, 40 years. The idea is that you finally pay off all of that mortgage. And when you default in paying your mortgage, what the bank does, it kicks you off the building. It revokes your mortgage and assigns that mortgage to another person. All right. So mortgage. Hello. Can everybody hear me? Hello. Okay. So yeah, I was talking about mortgages, and I said mortgages arise when you buy a property and you take the money for the property from the bank. A bank purchases a property, keeps the documents, right, and practically deducts an amount of money from your deposit with them over a course of years or months, okay, as a form of paying for the property. Um, as a mortgagor yourself, that's a mortgagee rather. The bank is the mortgagor, you are the mortgagee. As a mortgagee, you can also submortgage a mortgaged property. There is also what is called equitable mortgage, and they are different. There are different ways banks do business. There is a mortgage, there is lien, there is pledge. We are going to discuss all that, maybe not this term, maybe in the second term. So, but what you have to know is that the Federal Mortgage Bank of Nigeria is the apex mortgage bank in the country. It provides long-term credit facilities to mortgage institutions in Nigeria, which is what mortgage institutions are supposed to do for retailers, right? But because many of us don't really have money in this country, mortgage institutions do not extend long-term credit to us. Also because it is really difficult to hand over long-term credit facilities in a country that the economy is not stable. You can, for example, be an Okada rider today. Tomorrow, the country can say, we have banned Okada. A country does not have fixed fiscal policies, financial policies. It's really difficult to do business in that kind of country because you don't know what the government can say tomorrow. If, for example, you were a business and you wanted to do, let's say, Bitcoin, you've already settled yourself, oh, I'm going to do Bitcoin in Nigeria. And then you just arrive with all your money and your Bitcoin is wiped off because government just says, oh, No more Bitcoin in this country. You realize how devastating that can be to your business. And that is something that happens with many financial institutions, many financial facilities that we can have in this country. A stable economic policy is fundamental to the growth of any economy. If you do not have a stabilized economy or a stabilized policies that people know will not change for the next 30 years, how will somebody be able to invest in that country? You know, somebody can come tomorrow, the government to say, okay, we have banned online education. Nobody should teach online again. It's possible. These people in government, they can do anything. So if you ban that, that means all the shares people have bought in Zoom, in Google Meet, other apps that people are developing will just die off. And it will die off because the government's economic policies are not long term. And what usually happens is that there is usually a drive to change something, you know, change something. But a reasonable government should insist more on stability. Anything you do, insist on stability because each government's proclamation is going to have far-reaching effects on people. All right. So finally, we come to AMCON, and this is the information I got from the Asset Management Company of Nigeria, right? AMCON complements the recapitalization of affected Nigerian banks. There are Nigerian banks that may not be able to reach the goal set by the CBN. And this, the function of AMCON became really apparent during the Soludo reforms in 2004. Okay. So also during the um, Sanusi period, right? When Sanusi found out that there were so many non-performing loans that banks were reporting as profit. You know, you have a loan, they are supposed to pay you over a period of time, but the people that have that loan have not been paying it. The loans are not performing, yet to keep reporting it as profit. And Sanusi was like, no, you have to wipe this off your balance sheet. And once they removed all these non-performing loans in their balance sheet, it was found to be vacuous. Like many of the banks were problematic, or the assets, the Intercontinental Bank, the Diamond Bank, and the Oceanic Bank of those days. You may not remember, some of you that were born in 2000, you will not know what we're talking about, okay? So, but these were things that affected the banking business in Nigeria in those days. And AMCOM, during that Sanusi period, were able to provide a stabilizing force so that people did not lose their money. So they bought up um, the debts and liabilities and assets of these companies that were going moribund and sold them to viable companies. Many of these banks swallowed the smaller ones, and yeah, they kept investor confidence, right? There were not too much people crying. What you should have learned from this class is two things. One, um, the Some of you are complaining that you can't hear me. Can everybody hear me? Oh, if you can't even react to my question, that shows you are not hearing me at all. Okay, now, if you cannot hear me, you should state immediately. Why you shouldn't wait. Just state it immediately so that I can immediately correct it. I got a new earpiece. It's like this earpiece is problematic. I thought it was even better than the one I used to have. Okay. But then you've heard what I'm summarizing the class, which is two things you should have learned is that you should have learned first that there are laws regulating banking business in Nigeria. The second thing you should have learned from this class is that there are institutions regulating banking business in Nigeria. And three, that the real problem is not that there are no institutions, but that and systemic endemic problems that include the fact that people don't take their job seriously, what they are supposed to do seriously, and the general, what we call the Nigerian factor, which I want by all means to eliminate from this class, is also a very big issue that we are having with banking business in the country. Otherwise, the nature of regulations and the kind of institutions we have should lead to a very, very good banking climate in the country. All right. So yeah. So this is where we are at the moment. I want to thank you for participating, and I will quickly take questions. Please remain mute, my brethren. Children of so Wanda, please mute all these people that are making noise. I expect that on Thursday we'll have a very, very good presentation. This is very straightforward and clear. You should address me on what AMCON does, what are the regulatory institutions, and then maybe throw more light on what the history should look like. I don't really care about history because history is not important for lawyers, but it's just to make sure that we know where we are coming from. Okay, so we know that one of the things we don't do in this country is that we don't pay attention to history. And that means that many times we have to repeat what has happened before. So I'm hoping that will not be the case. Yeah. Michael, what do you have to say?
Good evening, sir.
Yes, please.
Thank you for the class. It was really inspiring. So, I have a question about the NDIC
Okay.
and the amount payable to customers of fold up banking institutions, sir. So, you said the maximum amount they can pay to the customers is 500,000 naira.
Yes.
So, I want to ask that.
Check from the website, ndic.gov.nj, I believe. If that's
Okay,
correct, you will find the most appropriate amount there.
Okay, all right, sir. So my own question is there any provision that customers can bring up courts petitions or actions to amounts payable to them, or is this fixed and dictatorial? That's my question. Or is it okay, we are paying you this so amount and you can't bring any court action, you can't do this, you that.
You know that the NDIC is not your bank. You have no business with the NDIC, so to speak. You have no contract with the NDIC. You have a contract with your banker. If you are banking with GTB, you have a contract with GTB. Now, whether you're a creditor is when we talk about banker-customer relationship, we look into that better to see, are we creditors of banks? Are we customers of banks? Are we are we in a fiduciary relationship? Fiduciary means, does banks have to relate with these customers with utmost good faith? You know, those are things that we'll look at when we examine banker-customer relationship. But it is the nature of that relationship that will decide whether you can proceed against a bank, whether you can sue a bank to get the money that you put inside. Because if you're a creditor, that means the bank owes you a debt. And if the bank is winding up, a company that is winding up owes its debtors a duty to pay them. So will you become a part of the creditors, or I don't know. So it's a legal question that is worthy of being interrogated further. And I will also say that you also realize that the banks are doing business. There are people that banks are taking money from as loan. Some of those people are also creditors that are waiting on the side to pounce on the bank, you know. So yeah, I feel like your question, I do not know if there is a legal authority that have addressed it, but I feel like your question is very, very apt. And I will look into it to see, for example, there has been anybody that's gone to sue the bank on the basis of the fact that we believe that the money is supposed to make the. But surely, I don't see anyhow you can sue the NDIC because you don't really have any contract with them. They are the insurance of banks, not for you. Okay. And you know privity of contract. You remember privity of contract from contract law. If you're not in a contract with anybody, you cannot sue them. So yeah. Somebody was raising hands. I don't know. Who was that? Do you want to say anything? Okay. Um, why is it that the girls in this class don't talk? Are you guys, why is it that the girls do not talk? Okay. Why is it that the girls in this class do not talk? Today is the International Day of the Women, Abi Women's International Day, something like that. So I insist that before we finish this class, somebody, a female, a female should ask me a question so that I can end this class in peace. Otherwise, I'll just ask one female a question. Um, I have two people I'm sure are female here, Christiana Young and Oluwaferomi and whatever. So, Christiana Young, do you have any question for me in the spirit of the International Day of the Women? I say female should ask me questions. Somewhere like there, you're asking me, why am I not addressing? Are you a woman? You people don't want to ask me questions. I'm going to pack my woman. Christiana Young, well, okay. She doesn't want to talk. So, but let me talk about the NICOM. NICOM, established in 1997, is actually okay. Christina Young finally has come close to her phone. Wow, that's great. All right,
Yes,
Christina, what do you want to say?
sir, it's not so much of a big question, but you made mention of the fact that an individual that would want to start a bank, like you want to be a bank owner, you would have to have about 25 billion naira.
Yes.
I want to know, has it always been like that, even before the regulation started in 1952, or it was as time progressed that the funds needed, the capital needed, increased up to that amount? That's the question.
That is a very brilliant question. Okay. If you were here last week, you would have known the answer, by the way. But that is also very brilliant. And the idea is that it was Soludo in 2004 that created that requirement. He said every bank must recapitalize to 25 billion. So it wasn't always there since 1952. It started in 2004. So it clearly wiped out many banks that were just father and son business, the Pascal Dozie and Sons, for example. No disrespect to them from Diamond Bank, no disrespect, but all those small banks that were just a father and son business were literally wiped away from that requirement. All right, so good. So we have a woman that's asked a question. Now we must realize that insurance and banking is not the same thing. While we should talk about insurance a lot, but we only talk about, for example, the NDIC in relation to the fact that they have a strong influence on the banking sector. When you are in 40, you are going to learn insurance law, and I'm sure you will have a lot to talk about with NICOM. All right, but we are not talking about NICOM as a fundamental institution that regulates banking in Nigeria because it actually regulates insurance. Sounds the same, but it's not. Looks like, oh, okay, it's all money they are dealing with, but no, it's not the same. Okay, so that is why we don't include NICOM. Well, thank you for bringing it up. The group that is presenting on Thursday, we just added one more group for you. Just talk to me about NICOM and tell me why we should include them. Now, I give you reason why we should not include them. So please take note of this, Clinton, and remind me in case they don't present it, I can remove mark from them. But tell me why we should make a case for NICOM to be included in the institutions that regulate banking in Nigeria. All right, so this is where we come to the end of our class. I want to thank everyone that has been a part of this. I want to appreciate you for using your data and coming online. It's not really easy, but thank you for coming. I will see you on Thursday by the grace of God. You will also get this recording on YouTube. Bye-bye.